Hello everyone, what's good, So I dropped some before and after charts, and a few people asked me to do a rundown or a breakdown of how I traded US 30 today. It's been a while since I did a video. Some of you probably already know I started my own academy, ForexNChill Academy. It's ForexNChillAcademy.com. And during the process of building the academy, I've also been building EAs and indicators, and also starting our own prop firm that will open this week. So I wasn't calling a lot of signals, and I wasn't doing a lot of personal trading because I was building my businesses. I believe everybody should have more than one way to make money. So now that I finished building my businesses, I've gotten back to calling signals in the group, and I still teach. The whole time I was teaching live twice a week. So I opened the academy April 21st. Tomorrow will be exactly 9 months. But so this, what you're seeing on the screen right now is a replay of me teaching last night. Okay. So this is US 30, and these are the projections, and I was teaching live just to show you. Right here is me teaching. Okay, fast forward. Forex. Okay, this is me charting US 30 last night. So I told everyone, I teach market structure. I love market structure, always have, always will. So if you look at Forex continuation patterns and Forex reversal patterns, what I do is I take market structure and marry it to smart money. So I look at market structure to determine what I feel like the market is doing, and then I find areas of liquidity in the market based on smart money concepts as taught by ICT on where to look for my entries. Okay, so if you go to Google and type Forex continuation patterns and look, you will see under images these different images. Okay, when the market is doing a pullback or it's accumulating, it's looking to accumulate orders, run liquidity, and then take the intended move. So you can also go over here and do Forex reversal patterns and do the same thing. Go under images. There's one called right here on the right. You'll see a bearish rising wedge or bullish falling wedge. That's what price is doing on US 30. So it's making, I call it a descending channel. A descending channel is showing price divergence. Positions are closing off, volume is getting lower. If you were to turn on like your RSI or your MACD, you would have divergence showing a reversal getting ready to set up. So whenever I see these patterns, I start looking left for areas of liquidity that the market is going to react from. It's not going to react and break out until it grabs the liquidity that it wants. Okay, you would have seen this earlier on the higher time frame on US 30. Now look at your weekly on US 30. Yeah, let me find a clean chart to put that on over here. Weekly. All right, so here is a perfect example. I'm on a large screen, so I'm just going to make it bigger so you guys will get a view. All right, so here you see price on this weekly had made your impulsive move, and then it started making it's what's called a complex pullback. It means your higher time frame is going one way, but your lower time frame has to break structure to create that pullback. So on your daily, weekly, your daily, your 4 hour and your 1 hour, you were getting like lower lows and lower highs. If you turn on your line chart, you can see here where structure was broken, and there is an order block under there, and here is where it broke the highs. Price was coming in here to sweep liquidity. Once it grabbed the intended liquidity, price breaks out. Those who follow me on my academy, they know I call it connecting the dots. When the market is making these structural patterns, they're connecting dots of liquidity. Okay, so what does that look like? Okay, you had a high and a low, higher high and a lower low. So underneath here on lower time frames are like order blocks, imbalance, pieces of liquidity that need to be grabbed for the market to accumulate, come down and sweep this last area of liquidity. And once they take the liquidity they want, then they go break structure. Once they broke structure, here was a weekly order block. That the reason price is coming here now is to connect the dots and grab this liquidity on this weekly order block. So when the price moves in the market, it's leaving behind patterns that it's painting, but it's seeking liquidity, and there's liquidity on every time frame. So the lower time frame you trade, the more dots you're going to get because it's making smaller patterns. But when you get to a higher time frame, it's making patterns like this. But inside the higher time frame, the lower time frame is doing other patterns. It's like patterns inside of patterns. So that's how I look at market structure. Market structure is creating the patterns or the order flow, and smart money is coming in and grabbing liquidity. So if we come back over, this is the chart I was teaching off of last night. When we get down to the 4 hour, I showed them this is the descending channel, or what the price reversal patterns over here call a bullish falling wedge, which means you're looking for a bullish reversal, or this one says a bullish expanding triangle. I just call it a descending triangle because it means price is going to reverse to the upside, or an ascending triangle or ascending channel when price is going to come back to the downside. Guys, excuse me for talking all over myself today, but I'm thirsty. I just literally had my first meal at 3:30. All right, so let's take a look at this chart and see how we got this trade. Okay, so last night when we were teaching, price was here. Okay, so a lot of people will look at this and they'll be like, well, here was a bearish engulfing, why didn't price trade up? This order block acted as price rejection, and also it built up the equal lows, which was liquidity, and it had not come into my higher time frame POI that I had highlighted. I only look, like I told the students last night on the sessions, I only look for these trades once it comes into my higher time frame POI. The move's not going to happen until liquidity is taken. Okay, so this move happened last night right after we ended the session. That's your initial reaction that came in to the liquidity. Now remember, I said on the higher time frame you'll have a pattern, but then also on the lower time frame you'll have a pattern inside a pattern. We have a pattern inside a pattern. Okay, we have another descending channel. Now we have a 5-minute descending channel that's inside that 4-minute descending channel. Whenever you see these descending channels, you want to see a break of structure, then price pull back in to get your entry. All right, price pulled back in after it broke structure, and price went up again. You're going to naturally get a reaction here to this order block. Okay, what did it start doing then? Price started creating a bullish flag pattern. So everybody's buying here, right? Because it bought here, it bought here, it bought here, it bought here. But I told them in the chat today, New York is going to come in if they want to go bullish. We need New York to come in, sweep liquidity. So that's why I didn't take the 9:30 trade. So I saw people calling signals to take the buy from the 9:30, and it temporarily played out. But when there's still liquidity here to be grabbed, so you have liquidity from here all the way down to here where your breaker structure happened. Breaker structure equal lows. It's an accumulation of liquidity that needs to be grabbed. Okay, so this made what is called like an expanding flag. If you go back and look at those bullish continuation patterns, you will see that. So I waited until price came and gave us that liquidity sweep. Okay, have an entry here. After it did this, price sold off. You could have snagged another entry here by trading inside the imbalance. So I took the entry on the 1 minute, and this was our first trade from New York this morning. So again, just as a replay, you had a descending channel, which is a reversal pattern, which also signifies divergence, coming into a higher time frame POI. So that's two confirmations. Then you had a break of structure, which is 3 confirmations, made a bullish flag pattern, which is 4 confirmations. Then you had another trade. So you could have taken this trade right here. After that, again, now you've had another break of structure. Here is where structure was broken. Okay, if you extend it out, you see that's where the liquidity was, where structure was broken. Price accumulated, built up liquidity. It induced buyers to buy at 9:30 open, just so it could sell off, grab liquidity, then make the true run. Okay, so we waited until liquidity was grabbed. Go down to your 1 minute. I'm waiting for price to come here and give me my reversal pattern. Okay, and here it is right here. Okay, we have another descending on the lower time frame. So now we have a pattern inside a pattern inside a pattern. Price is fractal. Okay, structure was broken. Price trades back into your order block. This is your 1 minute order block. Okay. You can buy off of this 1 minute order block as soon as price comes in. You want to go long. Put your stop loss right below. Now, I called a bigger stop loss. Why? Because on TradingView and on different brokers, you can have 20, 30, or 40 points, which is anywhere from 200 to 300, 400 pips difference in price. So I have to add extra to the stop loss because I don't know what broker the people in the academy are using when we call signals. When you're calling indices signals, if everyone isn't on the same broker or using the same chart and the same prices, some people are going to win the trade and some are going to get stopped out. In fact, one person, she said that one of her brokers won and one of them got stopped out. She took the signal from 2 different brokers, the exact same signal on 2 different brokers. Now, we got a 1 minute entry, but that doesn't mean we want a 1 minute exit. I was still looking at price on the higher time frame. And my final target was this 15-minute order block. So I wanted to take trade from here up to here. All right, so if you had been taking this from your MT4, you could have taken this entry. All right, trading it up from there to this order block, and it played out. And I also told them I was expecting price to react and sell off from this order block because it had been untapped. But that's basically it. I combine market structure with smart money. I use market structure to give me my patterns, tell me what price is doing. And I use smart money concepts as taught by ICT. The only concepts I really use of his are like the different order blocks, the imbalances, and the liquidity. Imbalance, you'll hear people refer to it as a fair value gap. All right, so that's basically it, how we took this trade today. You can take one setup like this a day and get really good results. I didn't chase any additional trades. Okay, so you would have had 1, a trade down here, 2, a trade here, and 3, a trade here if you had only traded US 30 from midnight until this morning. But you really don't need all that. To me, trading is about freedom. You don't want to always be sitting in front of a chart. When you know where the liquidity is, you can understand where price is going to go, where the market makers are trying to go, because they have to take out buyers in order to sell, and they have to take out sellers in order to buy. And I've heard other traders say it, and I'll say it as well. If you don't know where the liquidity is, you become the liquidity. Learning about liquidity, in addition to I don't care how you trade, whether it's market structure, supply and demand, understanding liquidity is going to greatly improve your odds and your win ratios and lessen your fake outs and your stop outs. Okay, so remember, I only take these trades on the 1 minute if they come into like a 1 hour or 4 hour POI, and that's how I traded this. I waited for the move to happen. You see how we had the 1 minute structure here happened inside this overall higher time frame structure, and it played out. All right, that's it for me, guys. I hope you learned something. If you don't have an academy, if you're not learning to trade, we welcome you to come to ForexNChill Academy. But everyone is free to watch these videos, and we hope to see you on our prop firm as well. Thank you so much for watching.